We've been paying attention to inflation for years because at some point it was out of control. It was running at double digits. Today, we're sitting at about 19% inflation since that time. This year, the U.S. government is going to need to sell about $10 trillion of debt, roughly $1.4 trillion deficit, which is the largest as a percentage of GDP, the largest deficit that we've run as a country, except for wartime during World War II and prior wars. Most people, if they're skeptical about cryptocurrency, they think there is no use case and it's just a speculative asset. There's certainly some coins out there that are used for that. And there are certainly some people that are just purely speculating in some of these tokens. They're not developers that are using them to build apps on top of it. Good afternoon. This is Kyrill with Centerfin's Collective Weekly for the week ending March 15th, 2024. We'd like to highlight a handful of things that happened this week that we thought were interesting and important. This week, we had inflation measures that were higher than expected. CPI, which is the Consumer Price Index, came in at 0.4 month over month when it was expected at 0.3. Later this week, we saw PPI, which is the Producer Price Index, came in at 0.6 month over month. It was expected at 0.4. Overall, the numbers don't matter so much in our view. We've been paying attention to inflation for the last couple of years because at some point it was out of control. It was running at double digits. If you look back to 2019 levels, today we're sitting at about 19% inflation since that time. Over the last 4 or 5 years, your money has lost about 20% of its value in that time. If you had a $100,000 that you were spending a year for your lifestyle, that $100,000 today is worth $80,000. You can see why this is really bad for people that don't have assets, where they can have assets that protect them against inflation, where they're living paycheck to paycheck. That's why the Federal Reserve has been all over it. The Federal Reserve is the government entity that is responsible for keeping inflation in check, and the only way the Federal Reserve can do that is by hiking interest rates. The goal is to slow down the economy and bring inflation down. Since about the middle of last year, when the Federal Reserve stopped hiking interest rates, so we went from 0 to 5.25% to 5.5% on interest rates, the Fed stopped hiking and inflation has been coming down. But what's happened over the last, call it 3 to 4 months, is that inflation stopped going down and it stabilized at a level of about, call it 3%, which is higher than the inflation target. And so the reason everybody pays attention to inflation and has paid attention to inflation is because the level of interest rates, which is basically the cost to operate in the economy effectively, because that's what every financing is based off of, has gotten very high relative to the recent 15 years. And everybody's afraid that the economy would not be able to sustain at these levels of interest rates. Now, the economy has been strong because we've had a ton of fiscal stimulus that is not controlled by the Fed. That's the U.S. government pumping money into the system via various means. And that's kept the economy strong while inflation has come down and interest rates have stayed elevated. What we think is more important to pay attention to, which is what we're paying attention to, is really the long end of the bond market. The Federal Reserve cannot control, at least not directly, the long end of the bond market. I'm talking about 10 and 30-year bonds, right? What we saw at the end of last year, which caused a lot of stress to the market in general, was the 10-year traded as high as almost 5%. At that point, stock markets sold off because that means that the U.S. government might not be able to afford to finance itself, right? We're running a massive deficit at 5% 10-year. That's very expensive to finance our government debt and the deficit on top of that. What we're doing is paying a lot of attention to the 10-year and the 30-year bond, which have been creeping higher over the last couple of months. And we need to see how that develops, because that is actually more important than whether CPI comes in 0.1 above or below. The Federal Reserve can lower interest rates. I think the predictive markets started out this year saying that the Federal Reserve is going to lower interest rates by 7 cuts, or roughly 1.75%. And now I think the predictive markets are closer to 3 cuts or 4 cuts, so that's 0.75% or 1%. We don't really think that's as relevant as what the long end of the bond market does. And so that's what we're paying attention to. Related to that, just wanted to remind folks that this year, the U.S. government is going to need to sell about $10 trillion of debt. And that is to roll over prior debt that's maturing and to finance the roughly $1.4 trillion deficit, which is the largest as a percentage of GDP, the largest deficit that we've run as a country, except for wartime during World War II and prior wars. And that is an important thing to keep in mind because, again, somebody needs to buy that debt. Now, a lot of people that might have held bonds that are maturing are going to buy some bonds, but if they if there's not enough demand, that's going to cause the yield of those long-term bonds to go up, and that's really bad for the federal government. It's bad for the economy, and we think it's more important to pay attention to that. The second thing we really want to talk about was the cryptocurrency market, and if you follow the cryptocurrency market, we view it as almost bifurcated between Bitcoin and everything else. Bitcoin itself we view as an asset by itself because it has established itself as this potential to be a global store of value that's completely decentralized, that's non-sovereign. It's proven itself to be that use case over the last 15 years, and we don't think that's going away. And so we follow the price of Bitcoin because of that, and as everybody knows, Bitcoin broke above its previous all-time high, and this week traded as high as 73 or 74,000 before, as we record this on Friday morning, it's traded down to 67, 68,000. So it's highly volatile, and everybody that's following or involved should recognize that it's volatile and be prepared for that volatility. Now, Bitcoin does drag up the other cryptocurrency coins with it. You have to distinct Bitcoin from the other coins. The second biggest coin in the cryptocurrency market is Ethereum, and then there's a couple of other layer ones like Solana and Avalanche, for instance, which are tokens that are smart contract platforms. Effectively, what that allows is for developers to actually build applications on top of these decentralized networks. So they're decentralized applications. The most well-known ones are DeFi, so decentralized finance, and NFTs, which is obviously minting certain images as collectible items effectively. Now, you can debate whether or not those applications actually have a use, whether or not they need to belong in society and people will actually use them, but you can't debate that creates a demand for these other tokens. If you want to build something on Ethereum, you need to own Ethereum. If you don't own enough Ethereum, you need to buy Ethereum, and that pushes the price higher. Same goes for Solana, Avalanche, and some of these other layer one chains. We like to parallel this to the current generative AI boom, and what you're seeing is pretty much every company out there has had to develop an AI strategy. And in order to be able to incorporate an AI strategy using generative AI into their business, they need to go out and buy GPUs from NVIDIA, which is why you're seeing NVIDIA's business skyrocket, which is why you're seeing NVIDIA's stock price skyrocket. So it's really a parallel story to what's going on in crypto, where if there's more demand from developers to build on top of these networks like Ethereum or Solana or an Avalanche, they will need to buy more of these tokens, and that will, in and of itself, drive the price higher. And so it's a little bit distinct from Bitcoin, although they're obviously very related. We wanted to point out that distinction because we don't think people recognize it. I think most people, if they're skeptical about cryptocurrency, they think there is no use case and it's just a speculative asset. There's certainly some coins out there that are used for that, and there are certainly some people that are just purely speculating in some of these tokens. They're not developers that are using them to build apps on top of. But there is a developer community on top of Ethereum and Solana and Avalanche. It's active and it's getting more active, and that is creating demand in and of itself. You can think about it similarly to outside of the cryptocurrency world, to generative AI and the demand for GPUs from NVIDIA. That's all we had for you guys today. Happy to discuss any of these topics in more detail. Obviously, none of this is investment advice, but let us know if you want to chat. Have a good weekend.